Hello everyone. I hope everyone has gone through case study number 1. Let's start the discussion of case study number 2, which is also from RTP May 2025 time. Let us start a discussion. HS Limited is a car manufacturing company. During the year, HSL has entered into many transaction details of which are given below. Point number 1. With the intention to expand, HSL Limited has entered into a share purchase agreement with the shareholders of FM Limited to purchase 30% stake in FM Limited as at 1st June 2002 at a price of 30 rupees per share. So they have done one agreement to purchase 30%. So 30% will give rise to significant influence. So of course FM Limited will become an associate. As per terms of SPA, HSL has an option to purchase an additional 25% stake in FM Limited on or before 15 June 2002 at a price of 30 per share. So they have an option to purchase additional 25%. So of course, if they will purchase additional 25%, if it is a favorable situation, so 30%, 25%, the total will become 55%, and they will obtain the control over FM Limited. Therefore, FM Limited will become a subsidiary. Right now, it is an option to purchase. Similarly, the selling shareholder has an option to sell the additional 25% stake in FM Limited on or before 15 June 2002 to HSL Limited at a price of rupees 30 per share. It means, can I say, the HSL Limited has a call option to purchase, and the shareholders of FM Limited has a put option to sell. It means, can I say, it will be always exercised. It will be always exercised. Means, can I say, right now it is a potential voting right, and potential voting right, if it becomes substantive, so can I say it should be considered for determination of control as on now only. Correct? Yes, sir. The decision of relevant activities of FM Limited are made in annual general meeting or extraordinary general meeting. Yes, a resolution in AGM or EGM is passed when more than 50% vote are cast in favor of the resolution. An AGM or EGM can be called by giving at least 21 days advance notice to all the shareholders. So right now it is the date 1st June 2002. Correct now. And can I say they can exercise the call option on 15 June 2002, which is before what? The 21 days when the meeting will be held. Means, can I say, right now the call option, which is a potential voting right, is currently exercisable. Therefore, it is become a substantive potential voting right, which should be considered for determination of control. Means, control have 3 elements. Control definition has 3 elements. What control definition? As per Ind AS 110 says that investor has a control over investee when it has 3 elements. First, power over investee. Second, exposure or right to variable return over from the investee, and the third is ability to use that power. When I say power over investee, what do you mean by power over investee? Power over investee means the investor has a existing right which gives the current ability to direct the relevant activities. So current ability means what? The right should be currently exercisable. So right now they have a potential voting right, and it can be currently exercisable before once the meeting will be held, and therefore it become a substantive potential voting right, which should be considered for determination of what? Power over investee. So right now they are holding 30%, and they have a call option to purchase 25%. Together it will become 55%. So it means they have a power over investee, and which will give current ability to exercise the relevant activities. Therefore, can I say HSL Limited has a control over what? FM Limited, and therefore it becomes the FM Limited will become subsidiary, and in this case the date of acquisition should be 1st June 2002. Let us see what MCQs they have given. During the year, HSL Limited issued compulsory convertible debenture on a private placement basis for 100 lakh. Each CCD is convertible into 5 shares at the end of 4 years from the date of issue, and annual interest is payable at a rate of 6% per annum. At initial recognition, HSL Limited recognized the liability component of compound financial instrument of 20,79,063. Means out of 100 lakh, what is the financial liability component? 20,79,063. Means difference become how much? Check करेंगे. 100 lakh minus 20 lakh 79,063 is equal to how much? The equity component becomes 79 lakh 20,937 and liability component is 20 lakh 79,063. Okay, sir. HSL Limited also incurred expense of 2 lakh in connection with the issue of the instrument. Means this become transaction cost. Now, as per Ind AS 32, if there is a transaction cost related to compound finance instrument, it should be allocated to both component, liability component and equity component in the ratio of their fair value. The fair value is given, we can allocate it. Correct. Now, nature of expense include fee paid to legal advisor, registration and regulatory fee. So this is nothing but transaction cost. I hope you have understood the accounting treatment of that transaction cost. Let's see what the MCQ they have asked. HSL acquired a 40% stake in NM Limited as at 1st Jan 2002 for rupees 8 lakh and classify the investment in NM Limited as an associate. So of course 8 lakh is the cost price and equity method of accounting will be applicable as per Ind AS 28. As on 1st Jan 2002, the carrying amount and the fair value of plant and equipment of NM Limited is 3 lakh and 5 lakh. So you can see the carrying amount is 3 lakh and the fair value of IRA on the date when the investee become associate is 5 lakh. So of course the increase in the value of asset, value of net asset is 2 lakh respectively with the remaining useful life of 5 years, that is 20 quarter. So you can see they have purchased the investment on 1st Jan 2002. So can you say for Ind AS 28 accounting is equity method accounting, we need to think about additional depreciation due to fair value adjustment. So 2 lakh will be the increase in the value of asset. So we need to find out the additional depreciation on that. So that is for 20 quarter. The first quarter is from 1st Jan to 31st March. So 1 quarter depreciation we should consider for the first reporting period. Yes sir. So divide by 20, it is coming how much? 10,000. It is coming 10,000. Okay sir. From 1st Jan 2002 to 31st March 2002, NM Limited generated a profit of 50,000. The profit, post-acquisition profit is how much? 50,000. So 50,000 is the post-acquisition profit minus 10,000 is the additional depreciation due to fair value adjustment. The 40,000 become what? The profit, the total profit from associate during that period, means from 1st Jan to 31st March into 40% is equal to how much? That is 16,000. So as per equity method, can I say 8 lakh plus 16,000 with the carrying amount of the investment? Correct. Let's see what question they have asked. Now coming to point number 4, while selling a car, HSL Limited provided trade discount of 1% on sale price which is mentioned on the invoice. So they have provided trade discount. Trade discount will be always deducted from the transaction price as per Ind AS 115. HSL Limited also provide a credit period of 7 days to its customer. However, he paid upfront, then HSL gives an additional cash discount of 2%. So cash discount will be received, means the cash discount will be given when it is paid upfront. Means if not paid upfront, then cash discount will not be given. Understood? HSL also provide a voucher worth rupees 500 with a validity of 1 year which can be used at an apparel store. So they will give a voucher, means this is nothing but some consideration is payable to the customer. Now as per Ind AS 115, if there is any consideration payable to customer, that will be deducted from a transaction price to determine the transaction price for revenue recognition. Understood? So this will be also deducted from the transaction price. So let's see what the MCQ question they have asked. Means this is related to Ind AS 115. Chalega. Now they have asked point number 1, at what amount HSL shall carry its investment in NM Limited in the consolidated financial statement as on 31st March 2002. Already we calculated this will be 8 lakh plus 16,000. So 8 lakh 16,000 will be the answer. First you have understood, very simple. Chalega. Next, point number 2, how should HSL account for trade discount, cash discount and voucher given to the customer on sale of car? Let's see what the option has been given. Means this need to be understood from the option which will be the best option from examination point of view. Trade discounts will be reduced from revenue. This is correct. However, cash discount and value of vouchers shall be charged as an expense. No, this is not correct. Means cash discount if received, that will be also deducted from transaction price only, and voucher is nothing but consideration payable to customer, that will be also deducted from transaction price only. The option number A is not correct. Trade discount and cash discount both shall be reduced from revenue. However, the value of voucher shall be. This is also not correct. Trade discount, cash discount and value of voucher shall be charged as an expense. This is also not correct. Trade discount, cash discount and value of voucher shall be reduced from revenue. This is the best option as per the MCQ, whatever option has been given. So option number D is correct. Option number D is correct. Understood? Can we go to point number 3? What shall be the accounting treatment of directly attributable expenses of 2 lakh incurred in connection with the issue of compulsory convertible debenture? Already I have said that 2 lakh will be allocated in the ratio of fair value of liability component and equity component. So what was the fair value? You can see this was the fair value. Let us allocate once. So 2 lakh into 20 lakh 79,063 divided by total is what? 100 lakh. 100 lakh. It is coming how much? It is coming 41,58,1 minus 2 lakh is equal to how much? 1,58,419. So this will be deducted from equity component. This will be deducted from financial liability, which will be recognized as an interest expense over the period of what? Over the period of the tenure, over the period of the contract. Means I think it was the life was how much? It was what was the life? 4 years. So it will be recognized as an interest expense over the period of 4 years. Correct now, by using effective rate of interest. Let's see what the option has been given. Entire 2 lakhs have been recognized as an expense. This is not correct. Entire 2 lakhs have been reduced from equity. This is not correct. A proportion of 1,58,419. This only we have calculated shall be reduced from equity. And balance 41,581 shall be recognized as an interest cost over the period of 4 years using effective interest method. Means this will be deducted from financial liability component, and by using effective rate of interest, now we'll calculate interest expense on what? Liability component. So this is only correct. Let's see point number D also. Entire 2 lakhs shall be recognized as an interest cost. This is also not correct. So option number C is correct. Got this point? Yes, sir. With more acquisition at the end of the year, HSL has investment in 2 subsidiaries, 3 associate and 1 joint venture. Which of the following statement is correct in relation to the accounting of this investment in separate financial statement? So in separate financial statement, Ind AS 27 will be applicable. Let's see what the option has been given. HSL is required to measure all such investment cost. This is not correct because as per Ind AS 27, an option has been given either at cost or at fair value as per Ind AS 109. So this is not correct. HSL has an option to account for the investment in associate and joint venture using equity method. This is 100% wrong because in separate financial statement we don't use equity method. Correct. HSL has an option for each investment to measure either at cost or in accordance with Ind AS 109. This is correct. But read option number D also. Option number D might be the better option. Correct. Now always read all the option in exam. HSL has an option to measure all such investment either at cost or in accordance with Ind AS 109. Means this is also correct. The option is available for each category of investment separately, that is subsidiaries, associate and joint venture. So this become better options. Correct now because that option is available category wise as per Ind AS 21. Means for subsidiary, if you have taken cost, for all subsidiary you need to take cost only. This means category wise option is available. So option number D become the best option from the as per the option given in this MCQs. Chalega? Yes, sir. With respect to SPA entered by HSL, determine the date when the HSL gained control over FM Limited. So the control was gained on the date, on which date you can see the date was what? It was 1st June only, because on that date they were having 30% stake, and also they were having some call option to purchase additional 25% on or before 15 June. Means they can exercise this call option before AGM. So on the date of AGM they can take any decision. Correct now. It means the potential voting right were substantive, and is substantive it will be considered for determination of what? Power over investee. Understood this point? Yes, sir. And therefore the date of acquisition will be 1st June 2002. Got this? All the explanation done. Let's see what the answer has been given. So point number 1, option number C, 8,16,000, it is correct. You can see they have added 20,000, means 50,000 of 40% they have added, and then they deducted separately the depreciation. So depreciation was 10,000 of 40%. They have deducted separately. I have done the net amount, means I have done the 16,000 net amount, they have done what? Separately. So you can do separately or net amount, both will give same answer. Option number 2, option number D, of course it is correct. Point number 3, option number C is correct, that only we have chosen. Point number 4, option number D is only correct. The reason is given, you can read the reason. Point number 5, option number A is correct, 1st June 2002. So all the points are correct. I hope you have understood the case study number 2. We'll meet soon again in the case study number 3. Till then, bye bye. All the best for your preparation. Bye bye.